Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very good day of trading and a very beautiful weekend as well. And in today's markets, guys, well, the bulls putting together a little bit of a bounce after last week's 5 days worth of red. Is it going to be enough to continue the daily uptrends, or could we possibly see a little bit more consolidation? We're going to take a look at that in today's video, and we're going to start it off with some technical analysis on our major market indexes, of course. Thereafter, take a look at our big tech names, see how those names are shaping up after today's rally. And lastly, of course, take a look at some of the swing trades that I'm contemplating over the next few days, and wrap it all up with a glimpse into my portfolio for the trades made today and what I continue to keep in my portfolio for the remainder of the week. So a lot to cover in today's video, guys, but should be a lot shorter than usual. Let's jump right into the action, shall we? So the SPY up a very healthy 0.41%. The QQQ's up a very healthy 0.69%. And as a whole, guys, the market was fairly broad-based. Take a look. Most of all your major indexes were in the green, especially healthcare and semiconductors. They have been lagging behind severely. And I kept saying that the SPY cannot go up in a significant fashion without those two sectors. So if we continue to see some strength in healthcare and semiconductors, the SPY should have a very good chance of continuing on the move forward. Now, moving on to our heat map, you can see that big tech, other than NVIDIA, had a fairly decent day. This is actually a rare day where the entire semiconductor index was up except for NVIDIA. NVIDIA, of course, having earnings on the Wednesday session. Other than that, only Amazon was slightly down. Tesla having another beautiful day of performance. Financials continuing their rally. They've been one of the strongest sectors in the most recent 2-3 weeks since the election cycle. Also, healthcare coming back with a little bit of a bid, but the major player, Eli Lilly, still being bogged down by those RFK headlines. RFK, of course, being nominated as the health secretary by President-elect Donald Trump. So he's probably going to start cracking down on a lot of pharmaceutical practices and making them more transparent. And thereafter, guys, the bottom half of the market having a very good day too. Industrials, utilities, real estate. Everything was up today, so suffice to say, it was not a market rally based off of a few concentrated names. It was really a broad aspect rally, which is exactly what we want to see after 5 days of red. We want to see money entering back into the market in a broad-based format, and that's definitely what we had today. So good first day of bounce. On the one-day relative, you can see that even better. Everything except for the healthcare sector, which getting slightly left behind still, everything was green. However, on the 1 week, the damage is still done. Only energy still at a positive stance right now. Everything else to the downside, led, of course, by healthcare. So good first day of bounce, guys, but I wouldn't get too ahead of ourselves. In terms of the macro that we're looking out for this week, well, there's really not that much to be had, right? If we just take a look right here, well, good thing it erased all of my settings. So let me just do that in real time. We really don't have much, guys, until the manufacturing report hits the markets on the Thursday session, right? If my calendar can cooperate, I could probably get this through to you. So the manufacturing report indeed on the Friday session, my bad, not the Thursday session. Before then, you can see there's really not much, just a few Fed speakers, no Jerome Powell this week. So the biggest day of the week is, of course, going to be the manufacturing PMI on the Friday. This is the report that made the markets tumble in the early month of August. So let's cross our fingers and hope it doesn't happen this time around. The expectation is for higher than last month. If I move myself over, you can see that. However, if we do come in much lower than the expectations, the market will definitely not like that. So where do we stand as well in terms of seasonality, guys? Well, we know that usually in an election year, November and December can be quite bullish. Why? Because all of the uncertainty catalysts are now behind us. Keep in mind, we've just went through all the big tech earnings. We've got the inflation data, CPI and PPI. We've got the GDP numbers. We've got all the important jobs numbers. And we've got Jerome Powell coming in with an interest rate cut and a further speech. Now, all of that together has led to a lot of uncertainty. All of that is now behind us. The election is now behind us as well. So the markets do seemingly have a at least 1 month path of somewhat smooth sailing, unless we get some truly recessionary indicative data, which is not the case right now. I do think that this seasonality can have a good chance of playing out early to mid-November. Is a little bit of a toss-up. You can see that mid-November dip, and then we continue rallying on into the end of the year. So could be a very likely scenario that this is going to continue happening over the next 3-4 weeks. I do personally remain bullish on these markets through the year end. Of course, we also have some major earnings to pay attention to, guys. Tomorrow's going to start off with a bang. Walmart and Lowe's, 2 indications into the health of the consumer. Those will be very noteworthy to watch, and I will be covering them after the market close tomorrow. Then on Wednesday, target TJX, which of course are more indications into the health of the consumer. And then NVIDIA, Snowflake, and Palo Alto, more big tech companies. Going to be very curious to see how those do as well. And then Thursday, we have Intuit and John Deere. I'll be covering all of the ones I just talked about in the respective days after the market close. And we're going to deep dive those earnings and see whether or not some of those companies as well could be possibly up for some swing trades. So all in all, guys, a fairly good day in the indexes. Let's dive into the technicals right away. But I want to first start it off, guys, with some of the names that had some great outperformance in the markets today. Number one, of course, we have to talk about SMCI. SMCI right now is up about 16% on the day. And when I throw in the after hours, guys, you'll see the majestic move of SMCI in the after hours up another whopping 40%. This is because they filed for an extension for not being delisted by the NASDAQ, and the market's responding really well to that news in the after hours. So congratulations to SMCI, finally getting it together a little bit. But even with that 40% increase, guys, they are still only at $30, barely breaching above our prior resistance range. And the other one, of course, has to be Backed Holdings. This is a company, a somewhat defunct crypto brokerage that Donald Trump and DJT Media are seeking to actively acquire. So of course, when that news hit over the course of the afternoon around 3 p.m., guys, the stock went crazy, getting halted every single 5 minutes pretty much before culminating in a 222% rally. Yes, guys, a 3x in 1 hour of trading, and thereafter in the after hours up even more. So fantastic rally there. If you caught it, congratulations, guys. But all in all, today was a day where a lot of fintech plays, a lot of crypto plays, and Tesla ran significantly hard. So we're going to tackle that at the end of the video when we get into the plays that I'm possibly looking at into the near-term future. Now let's move into some index analysis, shall we? So in terms of the SPY is still relatively healthy, guys, respecting the pattern that we were kind of playing out, right? So we did get a nice bounce in our support range, respecting the 26 moving average. And I was telling you guys, when you want to see the bottoming out of such a disastrous move to the downside, look for hourly oversold conditions and then look for a recapture of the 1 hour uptrend. Now, as of right now, the bulls have not recaptured the 1 hour uptrend just yet, but they're well on the way. If they break the highs of today into the tomorrow session, that'll let you know that the daily bounce is underway and does have some legs, and you'd want to see the bulls recapture as much as possible of this if they want to continue their march towards the all-time highs. If they cannot get it done in one single step, they may have to pull off the two-step recovery process. But the bulls not looking too bad. But as I said, guys, 1 day's worth of bounce is not enough to derive whether or not the bulls are safe. All we can know is that they do control all of the higher time frames. They control the monthly time frames. They control the weekly time frames. The market is fairly broad right now, as we saw in the heat map performance. And as a whole, guys, we do have bullish seasonality. So there's a lot of bullish bias leading into the next few weeks. So I would not be surprised if the bulls have it in them to recover all of this. If not, we're heading a little bit lower here for the gap fill around 577. So pay attention to those two very clear levels, guys. The high of today for continuation of the hourly uptrend and continuation of the daily bounce, or breaching the Friday lows that would undo everything and send us into a daily downtrend and into further weekly consolidation. We do still have a decent amount of space though, anything above 569, looking for that weekly higher low for possible further trend continuation. Moving into QQQs, the analysis is roughly the same at this time. So they almost got the gap fill down here, guys. About 492 is going to be the gap fill area. Not looking too bad though, finding somewhat of a base of support around the 26 EMA and around your prior all-time high and resistance range, which is now acting support for the bulls. So same thing as the SPY, guys. Still no actual hourly trend change in motion. You would need to break the highs of today over the session tomorrow for that to happen. Then you would know that the daily bounce actually has some legs, and we will see how high can they get. Can they fully V-shape this and continue the daily uptrend? Or will they have to maybe do the two-step recovery process? That's if the bounce is good. If you sacrifice the 1 hour trend into the early morning tomorrow, well then it's going to end up in a somewhat nasty daily downtrend, sending us for the gap fill, sending us also possibly towards the 485, which is kind of the last area of support for the bulls, especially if you look at it on the weekly around the 483. So I will keep my eyes peeled over the course of this week, guys, but one of the biggest catalysts for the QQQs over the course of the week is, of course, going to be those earnings, guys, from NVIDIA on the Wednesday session. They will most likely move the QQQs probably 1% in either direction, because the expected move on NVIDIA is about 10% up or down. So good or bad, NVIDIA is definitely going to have a everlasting effect on the market as it moves through those earnings. Moving into XLF right now, XLF up about 0.3%, but they really haven't given back any levels. They also haven't claimed any new levels either. We've been range bound for pretty much the last 6 days, so eventually this tightening range needs to break. Now the bias is bullish. Why? Because we control the higher time frames on the monthly especially, and on the weekly too. Gorgeous weekly uptrend. So stands to argue that the bias is definitely bullish at this time. However, it's a tale of two levels. 50.14 to the upside for daily continuation, and to the downside 49.58. Break 49.58, you end up in a somewhat little daily downtrend, and you end up possibly going for weekly consolidation after 3 weeks of very nice rally and sustaining prices at the highs. May just be due for a little bit of a retracement. And what we would need to see to give the XLF some breathing room to drop, you need to see the following two sectors go up. We want to continuously monitor this rotation, guys. When one of your lead sectors takes a little bit of a breather, you need to see the other sector make up for it. So here's another sector that definitely needs to make up for that slack if XLF decides to fall. And this is going to be XLV Healthcare. So healthcare trying to get somewhat of a bounce together. Keep in mind, guys, however, they are still severely daily oversold, as you can see on the RSI down here at about 25. Usually healthcare does not get this oversold, and when they do, they typically do have somewhat of a rapid form recovery. As we can see, the most recent times in the last 2 years, they've gone down to 25. Usually it has signaled a temporary bottom and a little bit of a bounce opportunity for the bulls. Keep in mind as well, guys, we are entering this massive area of support. Now, I've extended this range just to prove a point, because the monthly time frame, right? Even if we were to give back all of this monthly move and come back to the lows, is it that big of a deal, guys? As you can see, healthcare can be maintained range bound for a long time. So even if we cut the lows right here, it's very possible that we just maintain a somewhat range bound status in healthcare for now. I'm not really expecting a big monthly drawdown in terms of a monthly flush, on healthcare stocks as a whole. They've already been beaten down a lot in the past 2-3 months. So I'll keep a close eye on these, but for now, the sector remains out of favor. I'll remind you, what we need to see now is the same thing we saw in the SPY and the QQQs. Need to see the hourly uptrend shift. When you get it, you know that your daily bounce is underway, and then we will measure the size of this bounce in relation to the size of the decline, and whether or not the bulls are able to get a decent sized bounce to get the daily uptrend back, or whether or not they get a shallow bounce and then roll over, which highly heightens the probabilities of a retest of the lows or a flush of the lows for the further levels to the downside. So I'll keep a close eye on some XLV plays. Some of the plays that I really want to start potentially attacking in the near-term future are AbbVie and possibly the lower 160s to 150s. I do think represents a good opportunity to write some short puts on in this big prior area of resistance, which is now support. And another one that I'm looking at currently, guys, is NVO. I think NVO has gone beaten down more than enough as of lately, and we are coming up into an area of support, 99 down to about 85. I like this area and will be contemplating writing some short puts as we come down into that zone, into weekly oversold conditions and into deeply daily oversold conditions as well. Usually this confluence of things, the weekly oversold, the daily oversold, the horizontal support levels, and the long-term moving averages, usually represents a high probability zone for the bulls to defend, so a decent opportunity to write some short puts. Now moving into the SMH, so SMH up about 0.66%, not too bad of a day for them, right? But still struggling, the tale of being trapped between two levels. And even though the semiconductor trade was doing good today, guys, I do not think they will move that much before NVIDIA earnings. So this one likely trapped in this range between the resistance zone, which is 250 up to about 260, and the lower support zone, which is 235 down to about 225. These 10-point ranges should keep the market somewhat trapped until those NVIDIA earnings. No daily trend in price action so far, as you can see. They tried to get a daily uptrend going, didn't do it, failed. So now we are just basically trendless on the daily at the current time, trapped between two levels. Now, I do still like this lower range for some bids, especially when we do company-specific bids on your favorite stocks by writing some short puts. And in terms of the weekly, guys, on SMH, I mean, it's not looking the best, it's not looking the worst, it's kind of just in the middle, right? We had the weekly uptrend, and now we're in weekly sideways consolidation. You could make an argument that this is a weekly downtrend, and I would somewhat agree. However, the tightening range is a decent thing right now too, guys, so it's kind of the tale of being trapped between two levels on the weekly as well. The monthly time frame, though, does point to us possibly being in a extended bull flag. You know what this one reminds me of? 6 months of sideways consolidation, big dojis at the bottom showing big bull support. What does it remind me of, guys? It kind of reminds me of Bitcoin, how Bitcoin was kind of bull flagging for 5-6 months at the all-time high, right? With bullish sentiment around it, but just could not crack these higher levels. So we know that a few semiconductor names, well, not a few, a lot of them, everybody except for TSM, NVIDIA, and AVGO have been significantly beaten down over the past few months. So is this possibly going to signal a bottoming out of semiconductors if we get some decent NVIDIA earnings? Quite possibly, guys. And you guys know when this sector comes alive, it comes alive fast. So we'll be keeping an eye on this one over the course of this week. It should be the determining factor, those NVIDIA earnings, as to SMH's direction, possibly over the next few weeks of time. Moving into the Russell at this point in time, well, the risk on trade not performing the best over the past week, of course. There was a big blow off top right here. A lot of euphoria, a lot of greed, and I was telling everybody, be careful for the Wall Street trap. They love to do it. Run up the dailies, run up the daily overbought conditions, the 1 hour overbought conditions like this, the 4 hour overbought conditions. Everybody gets extremely euphoric, then they trap, and then they run the other direction with your money. So in terms of where we stand right now, it is still a daily breakout retest. As you can see, daily uptrend is nice towards the bulls, still looking for a daily higher low. Anything above 217, looking for that daily higher low for possible further trend continuation. Now we are coming back into a very big level that we just broke through 2 short weeks ago, which is the high of the resistance range of 2020 and 2021. So the bulls still looking healthy on this one on the weekly time frame, but they kind of need to put an end to the damage right now. We're coming quickly into the 217 location, and this is pretty much the maximum that I want to see the bulls give back right now. We've given back just over 50%. So if you want this one to look healthy for the possibility of weekly continuation to the upside, the bulls need to get the job done this week, guys. We cannot end up with another weekly candle like this. They will give back all of the move. It will translate into a massive supply zone up here, and it's going to be so tough to get back above that level, guys. It's been a big push and pull with the Russell over the past 2-3 months as we oscillate between the recession narrative, no recession, soft landing, no landing, right? A lot of different factors are into this analysis, and I don't believe this one will truly be able to run the way it wants to without the cooperation of yields coming down. Lucky for us, yields appear to be curving, but it's anybody's guess whether or not they're just going to stay range bound in these heightened levels, or if we really start embarking on this decline, right? The Russell needs the longer term yields to drop, guys. It's a sector that's beholden to the longer term interest rates. So that's what I think is really keeping us back from these extended rallies on the Russell, and probably why we haven't broken through this area much before the elections either. Moving on to the Dow Jones now. Dow Jones also showing similar characteristics to the SPY and the QQQs. Beautiful daily engulfing move after the election pretty much, and now we have a little bit of daily consolidation. So looking for a daily higher low, anything above 41,600, looking for the daily higher low for possible further trend continuation. No red flags on this chart, guys. It's looking extremely good. Support range down here, 43K, down to about 42.5. So looking very good on the daily and looking even better on the weekly in my humble opinion. Beautiful weekly uptrend, looking for the daily, or the weekly rather, higher low for possible further trend continuation, and everything lines up on the weekly. That is your daily support range, and on the weekly time frame, it is the 12 EMA, and the bulls have done a great job of protecting the 12 EMA for most of the rally since the later part of 2023. So that is your index recap, guys. Everything doing fairly well, if I do admit myself, right? Now, moving into the yields, we covered them last Friday in detail. We just briefly touched on them, so I'll cover these once every 2 days. Not too much to see though. You know, TLT trade is still trying to curl over. So is it a good time to bid right now? Possibly, but you're going to probably need to be a little bit more patient than you anticipate with this trade. Moving on to Bitcoin right now. So Bitcoin closing a beautiful weekly candle of trading on the Sunday session. And now, well, it's anybody's guess, guys. This is technically speaking a bull flag at the top. Sideways consolidation, accumulation at the top end of a range, all signs to point that the bulls want to keep up the momentum and not lose too much ground. They may just want to bull flag up here and then shoot up for the moonshot up to 100K psychological. That is a very, very, very real probability. However, to the downside, guys, I would pay special attention to 86,552. If you lose and close 86,552 to the downside, well, your daily uptrend for all intents and purposes is largely lost as the higher lows are lost and then you would be looking into a little bit of weekly consolidation. But look how much space the bulls have, guys. It's absolutely ridiculous right at this point. Anything above 65,000, arguably even anything above 58,006, if you take this leg right here, this is a mini leg. Anything above these two levels, guys, looking for a weekly higher low for further trend continuation. And I will be bidding these dips. And you guys know the best asset that I'm using to bid these dips is writing short puts on BITX well below the markets. So Bitcoin is looking fairly good in terms of Bitcoin dominance for your altcoins. Well, unfortunately to say, guys, the altcoin rally is not yet upon us. Dominance is still very high, and we still have not even set a daily downtrend, guys. And, you know, to say the least, I'm not even close to setting a weekly downtrend just yet. So if you want to see Ethereum and all the other cryptos really start pulling ahead of the Bitcoin gains, you need to see dominance start pulling down. One of them that's been severely outperforming, though, I mean, ETH has had a good rally, but kind of sideways, right? Especially in the last few days, similar to Bitcoin, but a little bit weaker. One that's really been outperforming has been Solana. You can see Solana did the same thing as Bitcoin. Big rally, consolidation at the top with Bitcoin. And then yesterday, pretty much Sunday, Monday, and into now the Tuesday candle, we have now broken above. So there are certain cryptos that are running a little bit harder than Bitcoin, some of them that are trailing, but I wouldn't say that you can drive an overall trend that the altcoin season is yet upon us. Not quite yet, even though we've had some good rallies on individual names. Now let's jump into big tech names, shall we? And give me a very brief moment. And let's jump into it. So Apple up a decent 1.34%. Not too bad, but Apple is still range bound, guys. Trapped between 230 and 225, and to the downside, 219 to 214. It's kind of like SMH, right? The tale of being trapped between two levels. On the daily time frames, no clearly defined trend. We have not broken and closing above 229, so I can't give it to the bulls for a daily uptrend just yet. And even on the weekly, take a look at this very confusing weekly chart. No real trend. We had the weekly uptrend right here with the breakout, and now we've kind of lost it, come back down, touching equal lows. One thing's for sure, though, if you break a weekly candle below 220, that will be the first weekly confirmed downtrend on Apple since the month of March. So pay special attention in the event we break down. In the event we just drift a little bit higher, guys, well, we need to get a break of 236 to really give me the impression that the bulls are in full control right here. So as of now, it's just a tale of being stuck between two ranges. If we are bullish on writing puts on Apple, I could see a thesis down here for writing some short puts, 219 down to 214. My desired entry level is 210 or better, but I wouldn't be opposed, guys, especially if the SPY and the QQQs are doing well, but maybe Apple is just fading down a little bit. I wouldn't be opposed to taking a little bit of a short put trade right here. But in terms of long call options, call debit spreads and stuff like that, I just don't think that Apple has its own bullish catalysts ahead of it to really warrant a blast off beyond the all-time highs, unless it gets carried by the rest of the market, guys. The valuation on Apple right now is very expensive. That being said, I'm not selling any of my long-term shares. I'm just not buying anymore. It is a hold for me. Moving on to AMD right now. So AMD showing a little bit of a sign of life today, but unfortunately, as it always happens, it cannot close a big green daily candle. Right? As soon as we get some momentum, it kind of gets taken away. So we know the context is a daily downtrend, and right now the bulls have a bounce underway. So pay special attention, guys, to the hourly time frame. Can they set up for the hourly trend change to the bulls? And then thereafter, we're going to measure the size of the bounce, right? The size of the bounce is very important, guys, because we're looking for a temporary bottom. As of right now, only a 38.2% move. So that is not enough, meaning if we roll over these timeframes tomorrow into a new hourly downtrend, and that is the extent of your daily bounce, well, the rollover probabilities of a revisit of the lows or lower are highly likely. Keep in mind, this one will move a lot on the Wednesday session after hours with NVIDIA earnings. So I'm not playing this one myself, but after NVIDIA earnings, let's say that AMD is still muted. If we can find some good put premium down here, 125 or lower, that could be a decent little trade because we are coming into a very big area of support all the way down here, right? So not looking too bad, but AMD is not top of my list right now for writing short puts or even for bullish momentum to the upside. For me, that is reserved for the top companies in semiconductors right now, which in my opinion are TSMC, NVIDIA, and AVGO. I'm only playing those guys because they have not lost the longer term timeframes. They still are in long duration uptrends, and I'm just going to play the companies that are most favored in this sector because the whole sector right now is out of favor. So when the whole sector is out of favor, I like to play the ones with the clearly defined trends. Now, moving on to Amazon. So moving on to Amazon right now, 0.45% to the downside, not looking too bad, but also not looking the best, right? We know the context of Amazon was the fact that they had the daily uptrend and now they lost it, right? So they lost the daily uptrend. It'll be entirely up to the bulls to gain it back, probably in the two-step motion. I do not believe they have it in them to do the full V shape, so we will be looking for possibly a two-step recovery process. In the event we only come up here and then flush a little bit lower into the daily downtrend and give back that 200 psychological daily downtrend style, well guys, what are we looking for on the weekly? This should be the clearest time frame for everybody. You are just looking for a weekly higher low for further trend continuation. The bulls are in absolute full control. So if we lose this little 200, where are we coming probably, guys? The 194 down to about 190 range. And if we do come down there again, I'm going to be probably throwing another leap contract at Amazon and going shopping for some sell put options very, very, very aggressively. I love this one. I'm not saying it's going to come down there. I'm just saying what I'm going to do if it does come down there. As of now, the bulls don't look too bad, especially on a weekly time frame. So if we can get a decent bounce going here, guys, the bias is bullish because we do control those weeklies. So keeping a close eye on Amazon should look good into continuation, especially into the Black Friday week coming up next week and into this Q4, which is traditionally the best quarter of the year for Amazon. Moving into Google now. So Google up a very healthy 1.67%, looking pretty good. Their Gemini Live, as a matter of fact, which they just put on the App Store, is quite good. They have a voice AI assistant, as you can see right here, and it's quite good. I tested it over the weekend myself, and no complaints. Google has really come a long way since kind of fumbling their AI rollout last February, or this past February rather, come a very long way in refining the product. Now, Google, no stranger to negative headlines as of recently, kind of needed this little bit of a boost, right? I'll remind you of the context. Daily uptrend is still in motion. It's somewhat treacherous though, big pullbacks, right? But we are reacting nicely from this zone. In my opinion, the time frame that provides the most clarity is of course the weekly as well. Take a look, weekly uptrend, looking for the weekly higher lows for possible further trend continuation. And where have we come back down into? Well, the same area that we broke out of, right? It's the good old breakout, retest, and possibly run trade. That being said, I love Google and I continuously play it with some short put opportunities down here in the mid to low 170 range. I like to get a little bit aggressive with Google because I want to get as many shares as possible, guys, because there's a few key things that are happening right now. Well, number one is the weekly MACD cross. After 3-4 months worth of downside, the momentum is definitely coming back in the bulls' favor, and I would not be surprised, especially if the indexes do well until the end of the year, I would not be surprised if this is Google's attempt at recapturing the 180s and possibly even the 190 levels. I will remind you, most analyst price targets for Google are well within the $200 range for 2025. So I want to accumulate as many long-term positions as I can and ride them into the new year. Google is still one of my very favorite stocks to bid in the market right now. It is the cheapest out of all the Mag 7 names on a valuation basis. Moving into Meta right now. So Meta struggling on the day, still roughly flat, and not able to claw back most of the losses that we had last week. So daily, yes, you can argue that we now are in a daily downtrending pattern for the bears. That being said, the most clarity, in my opinion, is provided on the weekly rather. So the weekly, they had a very nice weekly uptrend right here. And unfortunately now I do have to give this one to the bears because we do have a weekly close and break below. So this is technically speaking a weekly downtrend on Meta. When we have a weekly downtrend, we know we have to go one time frame higher to figure out what the bulls and the bears are trying to do. This is a beautiful monthly uptrend looking for a monthly higher low for possible further trend continuation. That being said, if we pull back down further into here, let's call it the 540 to 530 region, I will be bidding Meta stock, guys. It'll be a classic breakout and retest of the prior all-time highs, which were resistance, and now we'll be testing them as support, looking for the monthly higher lows. I'll remind you, Meta does this quite often to where they break out of a level and retest it on the monthly before putting in more gains. I do think that this time will be likely similar for Meta. Most of the price targets for Meta into 2025 have been raised, a lot of them in the mid 600 range. And I also would not be surprised, guys, if we see a $650, stock here in the next maybe 3, 4, 5 months as we kind of build up that momentum after this consolidation and just start gaining the levels over and over. So I will be sitting here for a little bit of a swing trade on Meta. The valuation down here right now is fairly decent as well. fantastic company in terms of fundamentals. Moving into Microsoft now. So Microsoft also just dancing around sideways, not able to get it done. They had the daily uptrend going, and unfortunately, we lost it again. So Microsoft has just not been able, guys, several times. This is the second time now that we've been trapped sideways for pretty much 2-3 months at a time, right? But it's a great opportunity if you are selling put credit spreads or selling straight puts, a great opportunity to once again be selling some premium at the lows. That being said, the daily uptrend is now lost, so the bulls have to do everything again from scratch and create the higher high, higher low, higher high pattern and start attacking this overhead area of resistance, 424 up to 432. On the weekly, same thing applies. Very tight range of accumulation similar to over here, guys. So I am still very bullish on this stock. I still like the valuation of this company, right? And most of the price targets for Amazon as well. I bring up these price targets because they're now 2025 price targets, right? All of them are above. This is literally over 55 analysts have price targets above the current price with a midpoint of 501. And Microsoft is the poster child for having some of the best fundamentals in the game. In my opinion, guys, this sideways consolidation that we've been having all year is a tremendous buying opportunity. So I have a bunch of stuff on Microsoft. I have call debit spreads from here. I have leap call contracts from here. And if we drop even lower, I will add more to those positions. As of right now, guys, just a decent opportunity to farm some premium down here or build up some long-term shares in such a fantastic company for the future moving forward. Moving into Netflix right now. So Netflix having a great day today, 2.8% to the upside and wasting no time in getting back to the daily uptrend, right? I cannot believe it, guys. It seems as though just yesterday, prior to earnings, we were at the 6 handles, right? High 600s, and now we are all the way at 850 just about a month and a half later. So the bulls putting in a lot of work on this one. Daily uptrend is gorgeous. Daily higher low is set, and now we have the new daily uptrending leg. So in the event we top out relatively soon, just looking for a daily higher low, anything above 806, looking for that daily higher low for further trend continuation. Now, in the event Netflix somehow rolls this entire move over and sets up the daily downtrend, is it that big of a deal, guys? Not really. Look at the space the bulls have created on the weekly. Looking fantastic for any signs of pullback. Should be a buying opportunity for the long-term bulls. I'm expecting maybe a pullback, maybe 800 down to roughly 775. This little pocket that we have right here wouldn't be unfamiliar for the bulls to do that. As of right now, though, no sign they want to pull back just yet. Next target, if they break through 850, guys, 900 psychological. Fantastic year for Netflix, guys. They're crushing the markets. 75% to the upside. Makes me very proud to be a long-term shareholder in the company. Moving into NVIDIA right now. So NVIDIA down about 1.29%, but was not always the case. NVIDIA at one point this morning was down a whole lot more. And I took advantage of this dip to write some puts on the company when it was down around 3%, making a play for an earnings positioning. Now moving into NVIDIA technical analysis, guys. Well, obviously, guys, I mean, NVIDIA has an expected move on the Wednesday session of 9.1%. So whatever I say today and tomorrow in terms of the short-term price action is really not going to matter when you have such a big expected move of roughly 9%, right? 9% to the downside will put us into a very attractive zone, which is the lower support range that we just broke out of. It'll make more sense if I put this on the weekly, right? If you put it on the weekly, nice weekly uptrend in motion right now. If we get the pullback into this zone with a 9% decline, we'd just be tapping prior support and the 26 EMA. And you can see we've tapped into the 26 a few times when it's gotten bumpy for NVIDIA. And to the upside, guys, well, obviously, if they break 9% to the upside, that'll be new all-time high, and we'll be cracking right above the 150, possibly 152, 153. So obviously, very tough for me to have a crystal ball and say exactly what's going to happen after earnings. I said this in yesterday's video as well. I'm very bullish on NVIDIA's earnings, but could this be once again a case where they are their own worst enemy? If you look at their earnings right here, the numbers were absolutely fantastic, guys. They were fantastic numbers, but because the comps, right, the comparative numbers from the year prior were also so good and they set the bar so high, it's tough for them to really beat with the same level of growth that they had in the past. So that being said, I'm expecting tremendous numbers from NVIDIA, but you guys have seen when numbers come in good, but not good enough, as what we saw in Meta earnings, Microsoft earnings, right? A lot of the other stocks, Google earnings were fantastic and they gave it all back. We saw this many times over the course of the last 2 earnings cycles where companies can have very good numbers, but Wall Street just responds with either flat or slightly up or even red after earnings. So I'm not ruling out any possibility. I do think the numbers will be very solid, but how the market reacts to them is going to be anybody's guess at this point. So the way that I want to position in this one is I will be writing puts between the 120 down to the 115 range, giving myself a wide margin of safety in the event that we do come down. And if NVIDIA does come down after their earnings, guys, I will be a buyer anywhere to 130 to 115, this whole range right there, guys. I will be playing short puts aggressively and maybe even throwing some call options at it for some upside continuation into 2025, because I think they'll be having a very good 2025 after all of big tech said that they would be ordering a lot more NVIDIA stuff over the next year. Moving into Tesla right now. So Tesla up 5.62%, again, looking very good, guys. So that being said, right, this was off of FSD news, successful FSD rollout news, and obviously the new Department of Transportation minister that Donald Trump will be appointing is favorable to the robo-taxi rollout. So we obviously have diminished regulations, something that Tesla was probably going to have some problems with in the future if this wasn't the case. But now that they have possibly the new head of the Department of Transportation on their side, they might be able to get through those regulations a little bit quicker. So that has been a wonder for Tesla stock today and is the reason that they have a 5.62% increase. Now, obviously, guys, resistance at the 360 level. But if the bulls complete this daily uptrend continuation, where are we going next? Well, it's going to be a big number, guys. I hope you're ready for this one, right? Next resistance range comes at 375 up to 400. Yes, $400. It seems as though only yesterday we were all the way down here. People were losing hope in Tesla as a brand, as a stock, as a company, as everything, losing hope. And now just a few short weeks later, we have almost doubled the stock price, guys. That is absolutely ridiculous. So the bulls looking very strong. In the event we consolidate a little bit more, I would like to see them protect this low down here, 309.55, because if you lose that, you set up the daily downtrend, which is not that big of a deal because you'd just be looking for weekly consolidation, but it means you'd have to wait a little bit longer for the bulls to gather more strength, more momentum, and possibly shoot up a little bit higher thereafter. So if you do pull back, just keep in mind, guys, support range down here, 312 down to 290. One thing's for sure, if we do pull back a little bit more, I will be looking to write some puts, guys, 290 down to about 280, looking to benefit from that volatility because the options chain on Tesla with all this volatility is extremely juicy right now. Now, lastly, we're going to take a look at Palantir. Palantir down 6.86%, but at one point this morning, guys, they were down pretty much almost 10%, over 10% as a matter of fact. So Palantir with a very rare double-digit decline day, but only for about 5 minutes before they took back a lot of it. So not looking too bad, guys, but I'll remind you, right? In the context of Palantir, you need to keep out this level right here, 58.52. If you lose this area and close below it, you will lose the temporary daily uptrend, and you will open up the doors for the bears to do something like this, lower high into lower low. And that would not be the worst thing, guys, because that would only be looking for weekly consolidation. I know nobody likes to hear that, but Palantir can take a few weeks off sometimes in the midst of its glorious rallies, right? So we could be expecting something similar if this is the start of consolidation. We know we have weekly overbought conditions right now. We know we also have severely daily overbought conditions too. So any pullback would be a very healthy pullback in my opinion. We've pulled very far away from the 12 EMA. And you can see when we pull far away from the 12 EMA, sometimes we do just move sideways until we kind of retest that 12 EMA. And then Palantir can put in somewhat of another leg higher. It does it all the time, right? So healthy consolidation is just that. Healthy consolidation. Anything above 41 is just going to be looking for a higher low for possible further weekly trend continuation. And I'm a big fan, guys. If I see some big volatility to the downside and I can write some short puts, low 50s, mid 40s with some good premium, I'm probably going to take the opportunity and play this one for what it is, a hype and volatility stock right now, kind of similar to Tesla. And that is pretty much everything for our daily market rundown as a whole, guys. The opportunities that I gave you in the top 5 options plays yesterday, they all went fantastic. You had entries on all of them this morning. Elf Beauty coming down to about the 115 level. I was saying look for anything under 113, preferably 110 down to 105. A lot of my Discord members were able to get short puts off down here, and their contracts are almost worthless already. So they're already making a ton of money on those contracts. So I like Elf Beauty. I think it's a great breakout retest opportunity for a long. So that could be a straight shot all the way up to maybe the 140, 150 450 range. Not looking too bad at all. Great breakout retest on the daily, and you can see what they're trying to do on the weekly as well, right? Weekly uptrend shift, and pay special attention, guys. Look at the weekly MACD. This is 3 months, 4 months, guys, of bearish momentum finally starting to cross with a weekly uptrending pattern. Potentially, a lot of things are lining up for Elf Beauty right now. Another trade that was on deck for this morning, guys, was Uber. So Uber coming down off of the Tesla robotaxi news. And at one point today, Uber was down almost 7%. And this as well was on my top 5 options list. I was telling you guys, anything below the expected move 70, depending on the size of the move, could be a great trade opportunity. A few of my members got these $66 puts for Friday, and they are now making money on those. I love the 66 level, so if Uber has another red day tomorrow, you could also be able to find some very juicy premium on these ones. $66, $65. I love that area on Uber. The valuation is very good down there. Could be very juicy for a little bit of a swing trade, building up a position here around the 50 EMA, which you can see Uber has not really lost since they started this whole rally here, except for the Black Monday event, of course. Since they started the whole rally since last July. Another stock that was on the top 5 options list yesterday was New Holdings, and New Holdings as well, giving an opportunity all day for the 13 short puts. I was saying in yesterday's video, I love this area for some support, so it could be a great little breakout retest zone for the monthly bulls, right? Beautiful monthly uptrend right now, just looking for some sideways consolidation. So I'm not opposed to playing some short put options down here in the lower $13 range. So all of those trades looking fantastic for the day today, guys. I'll remind you some of the ones I'm constantly looking out for again. UPS could be a fantastic breakout and run trade, especially if you get that weekly uptrend back. Airbnb also, I know Airbnb has been consolidating, but we are in the context of a weekly uptrend, looking for the weekly higher lows and possibly looking to make a next leg up higher. Other companies in travel have been doing phenomenally. Expedia doing very well, Marriott doing very well, Hilton also doing very well, and Booking.com doing very well as well. So is Airbnb potentially a play that's lagging behind that could be of interest to us, all us traders that are looking for a possible rally, you know, into the end of the year for Airbnb? I do sincerely think so. And the way that I'll be playing that is by writing short puts down here, 128 down to 125. If they pick me up, I will be holding those shares. So looking very good. And even one that's starting to briefly turn around. I'm not saying it's turning around right now, guys, but we have a semblance of some motion on Coca-Cola right now. If they can get the hourly uptrend going, we may start to have this daily bounce. And we know that Coca-Cola has been daily oversold now, guys. Daily oversold for literally the past 2 weeks. This is longer than daily oversold than Coca-Cola has arguably ever been daily oversold in the last 2 years. The last time was down here when we got to similar RSI levels. You guys saw what happens. We hit a bottom and it rallied very, very quickly, you know, in terms of the length of oversold. But the levels, look, every time we get below 20 here, you usually get a decent bounce on the stock. Here, same thing. Usually get a decent bounce on the stock. The bottoming out process can last a certain duration, but it stands to argue that when it does happen, you could see some nice retracements up by Coca-Cola. So I've been positioning in this one accordingly, playing a mix of short puts and some call options for the inevitable bounce for such a solid company. And the last one I'll bring to your attention is Berkshire. I brought this one up on the channel a few times in the past, and I was saying, watch this level here, guys, for some sideways accumulation. They're doing the exact same thing as here. Nice move up into a new level, consolidate sideways, and then eventually when you get the weekly uptrend break, look for that continuation, right? And now they're starting to do it underway. So we got the daily uptrend in shape right now. We possibly looking to move to the 482. So I'll be watching for that next leg up on Berkshire. I think it's a tremendous company right now. I think Warren Buffett's doing a great job. More of a defensive play, but one of the financial plays that I'm paying the most attention to right now. Special mentions, of course, we already mentioned them, SMCI and backed holdings, but a lot of the other ones, guys, especially crypto-related stocks. Look at Square. Square about to smash through 2 years worth of resistance right now. We have the call options from the bottom, but they're looking very good. And even the other brokers, right? Coinbase looking quite strong. Robinhood also getting that cryptocurrency trade money as well, looking very, very, very strong. Some of the ones that have been left behind, Mara, possible entry opportunity on Mara for some short puts. Now, to be honest with you guys, I don't really like the miners, especially if we're going long, but if you're looking to write some short puts on some Bitcoin names that are lagging behind, you know, $16 area for Mara is not that bad. Talking about roughly a year's worth of a support range down there. But if we're looking for straight call options, straight continuation, I've said it once, I'll say it time and time again, guys. I think MSTR, forget how much the chart has rallied, guys. Just use BTC as a proxy, right? This one is basically a leverage trade for Bitcoin. And I do believe that this and the BITX 2x levered ETF for Bitcoin do represent the best form of leverage trading for Bitcoin. Other than that, you know, if you're waiting for a dip on Bitcoin, can just buy Bitcoin yourself, just the asset, you know, not financial advice. But those are my opinions on those. And a few other special mentions. Enphase as well. I was telling you guys, could be a bottoming out process for Enphase. Daily oversold, weekly oversold, super, super, super out of favor. And a lot of people are blaming this on the Trump trade. Trump is actually not too bad at all for solar. This is the last time Trump got elected, when solar was on a downswing through the Obama years. And then Trump got elected, and I'm not saying he's the reason that solar popped, but he's definitely not a reason that it continued cratering through the floor either, right? So I do believe that Trump, especially with people like Elon Musk at his side, who has his own solar business, Elon Musk, right? The whole Tesla energy trade. You know, I don't believe that Trump is going to be that harsh on solar. I think it's going to be they're going to be very calculated investments, and Trump is all about being energy independent. And if solar and nuclear are part of that energy process, I think he will go on board with it, especially with Elon Musk as one of his close advisors. So it may not be as bad as people are saying. And I am taking that gamble by playing some Enphase down here. I have some call options, and we did write some aggressive short puts last week as well. So those are all the names that I'm looking at a little bit more closely. And obviously the names that are in my portfolio are all trades that are available, right? So in terms of the trades that we closed today here, guys, we did close a few trades, not that much, but we did take some profits here. So let me just pull up the good old Discord. And as you can see, right, so number one, we closed a Square contract. We closed one of them, took a little bit of profits. You know, we got into these for $550 each, guys. I closed 1 out of 4 for $1,500. I mean, the remaining cost on this position, for all intents and purposes, is roughly, you know, 50, let's call it 1650, right? Remaining cost is 1650. I closed $1,500. I'm writing the rest of the 3 contracts for free. They're January 16, 2026, $100 calls. I'm waiting for Square to go above 100. My thesis is 110 to 120. I'm going to be patiently waiting for the rest, but this is my first take profit on the company, made the rest of the contracts free, and that's where it is, right? That's pretty much everything. Also, you'll notice that we are not in the QQQ short-term call that we did anymore, so we did close those ones as well. So the QQQs, fairly easy trade, right? $6.60 was the close. We got these for $5.75 just last Friday on the massive dip. And I was saying, listen, hourly oversold conditions are a decent area to bid, especially when coming off the new all-time highs. And this is such an easy trade to do, guys. Add it to your tool belt. When you see a new all-time high and you immediately come into hourly oversold conditions very, very quickly, usually you know that you're going to get at least a decent bounce. And that's exactly how myself and my members played it as well. Not looking for the continuation of the moonshot through NVIDIA earnings to speculate that far on it. They're only 2-week calls. I mean, I closed this one early, and while I was talking, it continued moving up. So these are some good returns, 8, 10, 12%. A lot of folks got, which is fairly good in just a few hours of holding the contract, right? Other than that, guys, a few new positions. We're not going to go through the full portfolio because I did that last Friday. So if you didn't check last Friday's video, check it out. But a few of the new positions, Enphase rather, you know, we got assigned the shares of Enphase last Friday at 63, right? Well, now we wrote the covered calls, 63 covered calls for 78 cents. I wrote all of these in the first 5-10 minutes of trading, so I didn't get the best prices, but I respected my rules. I got over 0.5%. We got over 1% for these, so I'm very happy. As long as I can get 0.5% to 1%, I don't need to speculate and wait for the stock to rally tremendously. If I see the premium, I take the trade and that's it. Here's the NVIDIA 115 puts for earnings that I wrote early in the morning. Got 64 cents for 0.5%, and we're like 20% away on these, so not too bad at all. ON, I got assigned ON at 66 last Friday. As I showed you guys, I wanted to be assigned, and now ON, I got 98 cents in credit for writing the 66 covered calls. Now, I didn't get the best pricing at all, but you can see ON is already recovering above our assigned strike price, which is why I purposely got assigned these stocks, guys, because I was happy with the levels and I wanted to make more money on the covered call side. Now, the only other thing that I added today as well is the SOXL. Well, I don't think you can see it right now because I just clicked on the ON, but let me just show you from here. It's the only other trade that we did today, right? The only other trade that I did today is cover up the SOXL trade, which is right here. We got $1.14. We got assigned at 27.5, and then we got $1.14 for writing the 27.5 calls on the week, which is another reason why I purposely took assignment of SOXL down at these lower levels. I'm taking a chance on it, but they provide very good premium, so I will try my best and wheel out of them. And that is everything for today's recap, guys. So hopefully you guys enjoyed it. If you did, consider dropping a like on the video. Would appreciate it for the channel. Consider subscribing if you're new. We do these every Monday through Friday after the close. And lastly, guys, if you are interested in joining the Discord and getting access to all of these juicy trades in real time, here are all my trades from last week, the wheel trades, the earnings trades, the directional trades, the week before, and all the weeks prior. You can see a lot of wins in there. So if you're interested in joining, obviously past performance is not indicative of future results. But if you're interested in joining for all of the live trades, whether those be wheel trades, call options, shared trades, call debit spreads, there's something for everybody and everybody's account size as well. All my trade ideas, the private morning live streams we do every single day from about 9:30 towards 10:30, 11 in the morning. It's about an hour and a half, and chat with me all day. Ask me all your questions on your stocks, your options plays, and I'll give you my best opinion in real time, of course, with some chart analysis. If you want access to that Discord service, the link is always down below in the description, guys. So hopefully I see you guys in there if you're interested, and if not, I guess I'll see you back on the channel. So take care, guys. Have a good day of trading tomorrow, and peace.